welcome into this carrier update. And Donny, gonna look at what's going on in spot rates. Kind of as expected, what we saw Monday.
Spot rates are falling.
Yep.
And right now we show an average rate of the 230, but as we tick off, this is the purple line. The purple line is the daily. So this right here is a 7-day rolling average of the purple line. As we start ticking off some of these days, we're going to see it start to fall.
Yep.
Now, they did well over the weekend. We talked about that yesterday, but it's fallen down here to 229 for yesterday. Are they going to be able to push it back up today? That could be a big deal if they're able to keep pushing this back up. Or is it going to come on down here to 225?
Yeah, is it going to look like what we saw last week, right? Where we pushed it up kind of over the weekend and kind of almost into the 4th of July. I mean, 4th of July, you saw it down a little, but it doesn't seem likely because, I mean, we've looked at it before. They haven't really been able to establish positive momentum in a way that would indicate that, hey, we're going to be able to push rates back up. But
let's say they haven't been able to hold that moment.
Yes, they've had it, but they can't
push it up.
Sustain it.
They cannot sustain it. And that's what we see in a deteriorated market.
Yep.
We see the peak up real fast and then right back down. Now, we saw this other peak. This was kind of a little bit unexpected, but it was also over the weekend. Mm-hmm. And over the weekend, there's less capacity. There's less people working as well.
Yeah,
and
like
if you
less volume too.
Yeah, but you can catch that. And if you're the only one that's opened up, you can kind of charge the rate of whatever you want. And if they need it moved, if it's time sensitive, they'll pay it.
Yep.
And if it's not, they'll have to wait till Monday. So, and we've seen that effect up and then back down for Monday here as well. So keep an eye on this, but spot rates are, again, they're falling back down. Are we going to settle back here around this 223, 224 mark? Or are we going to go a little bit lower? I believe it'll come back to where we were here for a little bit, but in about 2 to 3 weeks, where's it going to go then? Are we going to hold it then? Or are we going to get into that little slow area and it starts to drop a little bit more? We'll see. If we compare this to our contracted rates, I've taken the fuel out. So we're at 170 without fuel. Reefer, 227 roughly right now. Now, this is a few weeks back, and this is the initial.
Yep.
And dry van, 240. Reefer's been picking up slightly. It's their high season. Expect this to grow till about the 4th of July, and then it'll probably start to fall here soon after. This has been on a slight downhill. But looking at May all the way to almost July, we're looking at, less than 10 cents.
Yeah.
So let's call this one steady. We expected this to drop a little bit more. Now, with this little pickup here, coming up here through June and July, we may see it trend up just a little bit as these initials come back in. And then now, I would say it's probably going to hold through July pretty steady, but come towards the end of July, getting into August, we may see these contract rates start to dip again.
I think what's interesting is if we pull this all the way back to July of last year, it was just under $2 a mile, right at $2 a mile. We're at $1.70 now, so pretty substantial declines. But I mean, all in all, you look at, what's interesting to me is, you would have thought that with where these rates were at the time, I mean, typically you think 6 months. What we didn't see was the contract rate decline. I mean, the decline is almost dead in line in terms of cents or cents per mile, right? I mean, we were at basically 275. Now we're at 240, which is what,
35 cents.
35 cents. We were at $2. Or right around $2. We're at $1.70 now. Right around
30 cents, yeah.
Yeah, right around the same declines. But the difference is the spread between the two is as wide as it's ever been, right? We talked about it being 42 cents back in 2019. Well, now it's what, 50 cents? Well, no, 70 cents. Math is hard this morning. But
yeah.
So, I mean, it indicates that there's so much more downward pressure on contract rates in the marketplace right now. And you kind of indicate it by look at what rejection rates are doing.
But look at the next few months, Tony. We only have August, September.
Yeah, look at when the big drop happened last year. Is that drop from July into August, and then another one in August to September? Yeah. That's where we're going to see
if we make it to here, there's not going to be much drops as we get into the fourth quarter
Yep.
part of the season. So these drops, as I said, August, September, this is when these are going to have the highest opportunities, along with spot rates possibly to drop. But we get into the fourth quarter, even though it's going to kind of be a bust, it's probably going to steady out.
Yep, absolutely. Well, Donny, thank you so much for this update. We'll be sure to check in with you again one more time before the end of the show. Right now, we'll hand things back over to Bill and Anthony.